Okay, A plus traders, welcome again to our YouTube channel. Today we are going to look at the 3 simple steps to trade any financial market. So be it stocks, be it crypto, be it Forex, the strategies and the techniques I'm going to share with you on this video, you can use them to trade any of the financial market. My name remains Anibetesama, but before we jump into the number 1 of this, I want you to quickly subscribe to our YouTube channel, A Plus Trading Hub. So just jump into YouTube, type in A Plus Trading Hub and click on and subscribe to our YouTube channel. So let's begin. Number 1, you need to identify a key zone and you need to mark this zone. Now, when I talk about key zones, I'm talking about supply and demand zones, or you can call it support and resistance zones. And these are basically found on the higher time frame, like the 4-hour, the daily, the weekly, 8-hour, or the monthly time frame. So first of all, you need to mark these zones. Then these zones must have at least 3 touches. Let me show you an example real quick. At least 3 touches. So this is an example here. You can see on this chart we have a touch here, and here is another one, and here is a valid touch again. So right now you can say this zone is a key turning point, or a key price turning point, anyhow you want to put it, or not English. So so right now all you need to do is mark this point, like draw an horizontal line, or better still, you can do this, pick your rectangle tool on your trading platform, then you do something like this. So all you need to do is plot this. This is how you mark your key turning point. So I hope that is clear. So let's go back. The second thing you need to do is wait for rejection and confirmation. When you spot this key price zone, you don't just jump in to take a trade because price have approached your key turning point. You need to wait to get some entry signals. Your entry signals can be maybe a moving average crossover, maybe RSI at below 25 or 30, or maybe RSI at above 70 or 75. So some traders use a combination of moving average crossover, RSI, and some candlestick formation. Personally, I use candlestick formation, and I spot divergence, and I also use RSI. So it's a kind of a 3-step confirmation. So you need to wait for price to approach your key turning points, the key zones. When you get these signals before you take an entry, so let's say for example you mark out a point and this point is a resistance, so you need to wait for price to approach the resistance. So until you see maybe a reversal candlestick formation, or maybe a moving average crossover from that area, that is when you can take a sell trade. Another thing you need to consider is you need to determine your exit price. When I'm talking about exit price, I'm actually referring to your stop loss price and also your take profit price. So before you jump into a trade, make sure you have already gotten your exit price, which are your stop loss price and your take profit price. Don't just jump into a trade. It is not good. It is not recommended. If you should do that, if you should just jump into a trade without figuring out your exit price, that is error. And if you should continue that way, you blow up your account within few days or few minutes. Now, number 3, enter with proper lot size. You need to know your risk appetite. We are all different, and as we are different, we have different risk appetites. So for example, my own risk appetite is 3% of my equity for each position or trade. Yours, you may be comfortable with trading maybe 5% of your equity, or maybe 1%. So you need to first of all figure out your risk appetite. When you know your risk appetite, this is when you can say, okay, fine, I will be risking so percent of my equity or my trading balance on a particular trade. If you want to learn more about this, then you can come on WhatsApp, ask me questions about it. I'll give you a little bit of explanation, then you'll be good on that. Another thing you need to do is use stop loss in pips to calculate and know the right loss size. Let me say this, you can't use one particular loss size for all your trade setup or for all your position. I get these questions a lot. Someone will come to me and say, what loss size should I use for a $100 account? What loss size should I use for a $50 account? What loss size should I use for a $300 account? For God's sake, you can't use the same loss size for all your trade. It all depends on your stop loss in pips. Now let me give you a tip. There is this app I actually use. It's called Steno app. I use it to calculate my lot size for any trading position I want to take. All I need to do, for example, when I'm doing my analysis, let me just jump to the chart right now. Let's say I want to buy from this zone here, then I'll bring out my position tool. Alright, so this is my position tool here, and my take profit is up here, and my stop loss is down here. Here is this level. Now is my entry. If you look at down here, you see 220.6. Now this is my stop loss in pips. So when you have this figure, you can easily calculate and know the particular loss size to use for each position you are trading. So your stop loss varies in pips. So if your stop loss varies in pips, that means your loss size for each position or each trade should also vary. It can never be the same. So make sure you are calculating your stop loss in pips to know the loss size for you to use for your trading accounts. If you are using maybe if you have, let's say, a $300 account and you want to risk 1% of your account, you can actually use that Steno app, put in your balance, put in your stop loss in pips, then put in the percentage risk you want to, and boom, you just get the loss size to use. If you want to know about that app and how to use it, you can send me a message on WhatsApp. Just look below the description or this video, you will see my WhatsApp there. So you just get in contact with me and I will tell you more about the app and how you can use it. So that is what we are going to cover on this particular tutorial. This is the 3 simple steps you should take or you can take to trade any financial market, be it forex, be it crypto, and be it stocks. Thank you for your time. Don't forget to subscribe to our YouTube channel, A+ Trading Hub.